Well, thanks very much for sparing the time for this webinar, and many thanks for Momentum for arranging this all for us. Going to take about 15-20 minutes just to walk through what we believe is not only a relatively new but an exciting product that we think most commercial clients will be interested in. First of all, just to introduce myself, I'm Gavin McLaren. I'm the Director of Clearview Credit and Financial Risks. We've been an appointed representative of Momentum for just under 6 years. Our mainstay of business is credit insurance, surety bonding and other financial guarantee type products. So we've worked with an awful lot of the ARs within Momentum over the years and dealing direct with them and their clients to help them with those sort of financial risk requirements. So if we now just move on to the presentation we have here. Personal guarantee insurance is not a new product. It has been around for a long time. And when I say that, probably 10, 15, 20 years, maybe even longer. The main issue that has been, especially in recent years, is the calibre of the carriers regarding this type of product. They predominantly are out of Gibraltar or the Isle of Man, all of which are not FCA regulated, or there are certain questions regarding it. They're not rated paper. And to be honest, we've never really wanted to promote a product where we didn't have faith in it ourselves. Also, previous policy wordings on this product have been questionable, with too many trapdoors into them, again, for us to make it worthwhile promoting the product. However, with association with Purbeck, who are a MGA on behalf of Markel, we now have a completely new product. Something worthy of spending some time on. As I've mentioned, Markel are the underwriters, so we finally have a Standard & Poor's A-rated insurer in the UK to support this, which makes an enormous amount of difference. So if we could then, from that point, go on to what is a personal guarantee. A number of us running our own businesses will probably be only too aware, but for those who aren't, for a bank or a financial institution to lend a business money, the business must be normally worth considerably more than the amount of money the company is borrowing. Now, for a lot of reasons, a company may not have sufficient assets to support a loan from a bank or an invoice discounting a financier of some sort. And that financier, in addition to asking for a mortgage or debenture over the assets of the business, will also ask for the personal guarantees of the directors, especially the shareholding directors of the business. This will mean if the company unfortunately goes bust, to use the phrase, and the bank cannot collect their money entirely out of the assets of the insolvent business, they will turn to the directors and call on the personal guarantees to ask for their money back. Because it is a personal guarantee, that will mean, under most circumstances, all of the directors' personal assets are at risk. It may be capped at a certain value, but up to that value, all their assets will be up for grabs for the financier to recover through the personal guarantee. This product covers and protects the director against a call on their personal guarantee because the business they are a director of has become insolvent due to circumstances outside of their control. Naturally, it does exclude things like fraud undertaken by the director themselves, of course, as any policy would probably exclude anyway. But the main area here is A, to help your client obtain finance, and B, keep the worry that he's not going to lose his house if it all goes wrong. Where the policy is geared is to support the financier who's asking for the personal guarantee. Obviously, it's going to indemnify our client, the director of the business, but the finance company that's asking for the personal guarantee will be listed on the policy as the loss payee. So if there is a claim, our client, the personal guarantee, does not get paid. It is the bank who's asked for the guarantee who will get the money. Now, there has to be formal financial agreement between the company and the bank or the financial institution that the director is providing his guarantee for. We are predominantly looking at secured loans, so be that a commercial mortgage, invoice discounting or factoring on a customer's debtor book, asset finance. They've got a loan out to purchase new plant, machinery, vehicles, maybe even other businesses too. But it has to be a tangible asset of some shape or form they are borrowing money on, and that is where we will be supporting the personal guarantee back to the financier. It can roam from something quite solid, as in mortgage on a property, which is very solid by default, it's bricks and mortar, through to peer-to-peer loans for cash flow for the business. So it can be quite a wide range that it will cover. The one thing it will not cover, and it's not available at this time, is personal guarantees to support leases of commercial properties. If they're buying the property, yes. If they're renting and leasing, unfortunately, they're not prepared to accommodate that type of personal guarantee at the present time. As I said, it can get quite loose with regard to the funding we can do for personal guarantees on business credit cards, on overdrafts, peer-to-peer loans, as I said before, and short-term working capital. So it doesn't actually have to be a solid item sat on the factory floor for this to apply. The standard indemnity level on these policies is 80% for any fixed or secured loan. So your client, our client, will always have 20% skin in the game, so to speak. If they had a £100,000 personal guarantee and there's a loss, hopefully or expectedly that the insurer will pay £80,000, our client will still be in for £20,000. On secured loans, there is a maximum level of cover of £400,000, and on unsecured loans, that is where you are peer-to-peer lending, credit cards, that type of thing, there'll be about 60% indemnity in year one, and there'll be a tiered increase to 70 and 80% over the next couple of years, subject to no claims. You'll also notice that the maximum level of cover restricted to £300,000 in such cases. Premiums can be paid annually, but also can be paid through 10 monthly instalments, interest-free. Purbeck have arranged premium finance arrangements that are not passing across any of the interest related to it, so it will be interest-free charges for up to a 10-month period to the client. For us to obtain a quotation, we only initially need a few bits of information to get the ball rolling on this. We'll of course need the director's name. In fact, that brings me on to a very important part, just looking back where it mentions partners as well. The policy will assist with personal guarantees given against limited liability companies or limited liability partnerships. Clients who are sole traders cannot apply because they have unlimited liability anyway because of their status. Going back to this again, the information we need is the directors' names, the company that they are a director of, who is the finance company that they have given a personal guarantee to, and the details rather of the funding that they've taken, and the value of the personal guarantee they have given. With that, we can do some initial due diligence and come back within approximately 24 hours and give an indication of A, interest whether Purbeck can support, and all being well, give you terms and indications of costs. Should this be of interest and your client would wish to proceed further, there is the proposal form that needs to be completed, and we will provide that together with a full report with policy wording and our TOBA, of course. You will note also on the top of there we are saying directors or plural thereof. A number of companies will quite understandably have more than one director, and they may be all giving their personal guarantees to a funder. Under normal circumstances, it is what's known as a joint and several guarantee. So if there is a £400,000 total personal guarantee, the directors combined own that 400 or are liable for that 400,000, but each one is also separately responsible for the 400,000. So come what may, the funder will get their money from somebody, if not all of them. Under the policy, we can add up to 5 directors who have joint and several liability under the one policy at no additional cost. So the premium for a £400,000 policy covering one director will be exactly the same cost as covering up to 4 of his co-directors, all under the same policy. The commission level on this, for the time being, is still being negotiated, but we are expecting to be able to offer you around 7.5% of the premium. The premiums start at £3,000 per annum and have been gone up as far as £12,000, but that was for a particularly extreme case through a credit funding circle where there was no due diligence taken on the funding at all. On average, we're seeing premiums between 3,000 and 5,000 as an average. As I said, that will be payable by 10 equal instalments, and we'll be looking to offer our Momentum, our colleagues, 7.5% commission on that, plus a repeat of that at renewal subject to compliance issues. That really finishes off that brief summary, so thank you very much indeed for your time, and open to any questions, please.
Right, so I'm just going to unmute everyone, so if anyone's got any questions, just speak up.
Hi, Gavin.
Hi.
It's Steve.
How you doing?
From Leading Edge. Yeah, I'm good, thanks, Gavin. Funny enough, I had a client this morning who was asking me just about this, but they're just about to go into liquidation. And
that's a bit like the thatched cottage with the smoke coming through it, isn't it?
Yeah, it is, and he needs cover against a commercial lease on the premises, so that's out. Just an observation. Yeah. Useful, interesting, thank you. I don't think I've got any questions, but thanks anyway.
Okay, I mean, the one thing just on the back of that, you would be amazed how many of your clients do have a personal guarantee. It's not something that we would normally ask our clients, even though our insurance policies support finance most of the time. And we've been doing an experiment over the last month or so, seeing clients and prospective clients, and without any exaggeration, 80 to 90% of all the clients that we speak to in the SME, up to £10 million turnover category, all say, yes, we've got a personal guarantee, and most of them are saying, we really don't like it. So you would be surprised how many of your clients do already have this obligation.
Right. Just a question, because I missed the copying down the detail from the slide, Gavin. For unsecured loans, there's something less